Congratulations to anyone who's been buying the dip for the last couple of months, especially in the last several weeks here. I've been buying the dip, and I know so many of you all have been too. Congratulations, because this very well could be the start of a massive bottom. Or are we going to go back down just one more time and then boom, baby? We're going to go ahead and do a rocket ship from there. So this was posted last night, literally in the final hour, by President Trump, pretty much stating that, hey, good things are coming from this. Things are going to be wrapping up, hopefully. Not bad, all good. We don't want the Middle East stuff to continue. We don't want oil to be as high. We don't want inflation to really surge. We don't really want a lot of uncertainty to linger in the market, because yes, it is phenomenal to be buying stocks in these beaten down levels. You do want to ultimately have your positions go up and not just really stagnate or continue to bleed down. But like I said, for anyone out there that's been buying this drawdown, the dip, in the last almost 6 months now, I've been posting videos all over this YouTube channel the last 6 months primarily. I'm doing a public account challenge on this YouTube channel. I'll show my public profile momentarily. But I've been buying stock very heavy in the last 6 months now. Well over $60,000 of hard cash. And here's the reality. The reality is that buying stock in the stock market is just like at any given time. The markets could be at all-time highs. There's going to be always discounts out there. The market could very much be in a mediocre place. There's going to be phenomenal discounts. The market could be in a drawdown. There's going to be so many discounts that you don't even know where to really begin. And what we're basically pretty much seeing right now in the market is very explosive moving up higher in just about every single asset that has been pushed down, primarily risk on assets. The stocks that I cover on this YouTube channel, if you're new, welcome. I am very much a fintech bull, a semi bull, a SaaS bull, big tech bull, risk on pretty much I cover risk on assets. Let me just go ahead and sum it up. And even though all the names that I pretty much just threw out there, they are all risk on stuff. And you're seeing some pretty big moves here. Right now it is 10:01 a.m. So the market's been theoretically open for a little bit over 30 minutes now. We are getting pretty much of a pullback here, but still SoFi very much up. AMD the last couple days very much up. AMD's gonna have a great year. I can't wait. Adobe. I want to get back to SaaS momentarily, okay? Robinhood is showing tremendous amount of moving higher. Palantir software, I'll get to that momentarily. Meta, Mag 7s are definitely moving up. Microsoft, not so much. Software, I'll get to that momentarily. Even PayPal is moving up a little bit. Oracle was up 5% in pre-market. Now it's not so much. I'll get to software momentarily. Big things to really look at. The major index, obviously, indexes. You got SPY up nearly 3%. You got the Qs hovering right below 3% here. Then you got the IWM Russell, nice over 3%. The NASDAQ, very much green, little bit green. The Dow Jones, very much green. The VIX is crashing down to utter Chinatown over here. We see oil back below $100. Very, very good. Bitcoin obviously reclaimed the $70,000 level here. Okay, so first and foremost, I just want to cover a little bit about major indexes. Then I'll get into individual stocks. Then I'll get into my public account here and what I'm doing. By the way, if you enjoy my content, smash the like button and subscribe for more. This is relatively a new YouTube channel. I have other YouTube channels. They are very much bigger, but I haven't advertised this one among my other communities just yet. And I'll give you all a heads up, especially on this channel, because we're probably going to be getting a bunch of dumbasses coming over here that don't really understand anything. Believe it or not, a lot of people think it's stupid to be like in the stock market. Hey, if the stock market's not for you, you do you. But if you're not in the stock market, what are you doing with your money? Are you putting it into real estate? Okay, that's good. Are you putting it into precious metals? Sure, that's smart. Or are you just being a derp and leaving it in a bank account where you're probably not beating inflation at all? Even SoFi, they offer, I believe, it's a annual on their savings. It's like 4% APR. I honestly don't even think that is truly beating inflation, because the inflation report that we're getting from the Fed, it's not really like the actual inflation. So if you're just going to be hoarding cash, or if you're not making cash at all, it's the wrong terminology in life. Okay, so major indexes, we just literally exploded on the SPY here. So the good and the bad. One is that obviously this news has very much prompted good things. A lot of optimism, a lot of worries, a lot of fears have been utterly crushed now. All good things, like I said. Ending the conflict in the Middle East, the war, whatever you want to pretty much call it. It's not bad. It's, if anything, it's definitely a very positive thing. Now, when it comes to technical analysis, and yes, you got to know and understand technical analysis, because if you don't, it could very much affect your long-term buys, trades. And I do understand so many people, very much hardcore investors, tends to really give like technical analysis the biggest, hardest rap. But understand that technical analysis can be used to really signal and indicate, hey, maybe I shouldn't be buying too heavy. Maybe I should be buying very soft. Maybe I should very much like semi go all in. Maybe it's a big one, right? Technical analysis is definitely something like this. Obviously, below all the moving averages, the 200-day, the 50, and the 100-day. This is basically called a gap that we basically pretty much just did on the charts. Gaps are very much widely used as a terminology for even investors and traders. Now, we don't necessarily have to go all the way back down to the 200-day moving average, but it tends to pretty much like happen. I don't want to say we're going to have like a little bit of a pullback here on the SPY, but things tend to very much happen like that, especially when gaps to the upside pretty much happens. What I mean is we could very much pull back. It's very important, obviously, today and also tomorrow to really stay above the 200-day moving average. If you want to see a really good gap on a stock that I love and own, AMD has many gaps. What happened back in October last year is this big gap here was caused by OpenAI. OpenAI said, hey, we're going to be investing a lot of money into AMD next year, 2026. Obviously, the stock gapped up tremendously. And then ultimately, we ended up pulling back. It doesn't have to be perfect, but you tend to see stocks pretty much fill a gap, which means the stock just pretty much fills, it trends down over time to around like an area. Doesn't have to be perfect. So like I said, the SPY has very much gapped up. You're going to probably hear that term even on like Wall Street, like videos, or even on like CNBC. They're probably going to say, hey, we just gapped up on the SPY. They're talking about basically the charts, and they're talking about how you have like an open gap right here. It is good. We're above the 200-day, like I've been saying. Yesterday's video, I talked about this a lot. It's very important to stay above the 200-day moving average. Same thing with the Qs, very much above the 200. The IWM, we have gapped up even above the 50-day moving average. So we could very much pull back to the 50-day moving average. Not bad, but it's all about overall the next couple weeks and seeing very much a bullish uptrend here. Obviously, the VIX is very much crashing down. That's bullish. Oil very much taking a beating down. That's very good too. So next thing I really kind of want to talk to really quickly is we're seeing a lot of stocks, risk on assets, very much move higher, but we're seeing a lag in the overall software like names. Microsoft is not just very much like it's 1% when you look at like a company like Meta that was up here momentarily ago by 5%. Very different. And why is that? Because the AI SaaS software apocalypse fear is still here. And I pretty much stated this in the last couple weeks now, is that we could very much get out of Iran, but now we're just going to go back to software fears. So we have a lot of stuff going on in the market. This is very different than Liberation Day, because Liberation Day was only tariffs, and then we basically rallied throughout the summertime. Now we're looking like we're going to be ending Iran, but we're looking like the software fears is still here. We're going to be recovering what we lost with Iran and oil surging, but until software companies pretty much recover their bullish sentiment, their sweet spot, we're not going to be recovering out of SaaS apocalypse. So this market could very much trend higher, but as for going on a tear, that's really not going to take place until we utterly recover of software, because software fears started this downward cycle. Okay. 4 or 5 months ago, people were talking about AI basically taking over software companies. Iran was not an issue. Then we moved into Iran. Now we're moving away from Iran and back to the fears of software. So, going on my channel profile here, I've been posting my buys on this YouTube channel for a while now. I'm doing a fun little challenge for educational purposes on this YouTube channel. Looking to take this amount here to 6 figs in the course of 17 months. The account challenge started 2 January of this year. I have a set amount of rules depending how much I can deposit in one specific amount of time frame. But I've been depositing a lot into this account over the last couple months and also utilizing pretty much all my capital. Very funny because a lot of these positions obviously very much smaller. SoFi primarily, and a couple months ago, if you were to check out some of these videos, you would see my SoFi cost basis was very much lower. SoFi I own on another profile too. Massive position for me. Same thing with AMD. And I do get asked this a lot. Do I own the same stocks in other profiles? I do. Because if I'm obviously investing into stocks on this profile, it really wouldn't make sense for me not to own it on like others and stuff. But the big thing about it is that software fears are still here. Adobe is very much going to be a lagger in my opinion, and very well could be maybe all of this year. Maybe the software fears pretty much continues into the course of like the later portion of this year. Obviously, Hood is going to follow Bitcoin. But I mean, Palantir, and Adobe on this profile, along with Oracle. Oracle, picked up some shares here and also another share recently. I'm going to be buying Oracle over probably the next like quarter or so. But I mean, Oracle is down by over 50%. And they're following in suit pretty much of SaaS apocalypse, but they also have their own problems going with them. I've talked about Oracle, about how there is a major bet against the company. But hey, do you believe the management team? The management team is saying, hey, don't worry about our backlog of debt. Don't worry about our order fulfillment. We got this. Do you believe the management team? I mean, do you believe SoFi's management team, even though their stock has been utterly wrecked in the last 6 months? I do, which is the reason why I'm buying more shares. I also believe in Oracle's management team, along with Adobe's management team, Robinhood's management team, AMD management team. Palantir, I'm pretty much good on, just because Palantir is going to trade rich when the market goes like bullish. So, what am I really doing right now? I'm just really chilling. And the reason why is because I've been buying on every single red blood fearful days. Right now is such a green day that, like, honestly, today is the type of day to go and play golf. Okay? All the red days that we've had many weeks ago, many months ago, those were the times to be buying. When the market's green, it's like, cool. Hey, it's green. My prediction, and could be wrong about this, but I really feel that on the major index, the overall market is probably going to experience a little bit of a pullback, a little bit of a fear, and then we're ultimately going to trend higher. But like I was saying, for us to really get out of this downward market that we're in, we need the software companies, primarily Microsoft, to really start rock and rolling. And for a magnificent company like Microsoft, for it to be beaten down like this, it really shows that, hey, the software industry has taken damage. And until that damage has very much been changed, or a mindset has been altered, we're not going to see the overall market pretty much return. Because I kid you not, we're going to go from worries of the Middle East to now worries once again about software. The software worry is not over. It's still here, okay? It's just shifted because the market can only focus on one thing at a time. It's very, you got to look at the market as being pretty much as like a child in a way. Maybe that's like a terrible analogy to use, but that's really how it is. The market is like a child, okay? It can only focus on one thing at a time. It can't multitask. So all the eyes are on the Middle East. Middle East gets solved. Now we're going to go back to the worries about software. Maybe this earnings coming up, maybe that's going to alleviate the software like fears. Honestly, hopefully it does. Hopefully, because it's the dumbest thing in my opinion. I use Adobe products every day. I was actually using Adobe products late last night. Adobe is not going to just magically go away. And of course, Adobe is not magically going to go away. A lot of Wall Streeters are betting that Adobe will be slowly bleeding over time. Do you believe that? Do you believe their EPS and earnings are going to fall off a cliff? I really don't. I think AI is going to have a tremendous play in the software industry. So, the Middle East comes to an end. We have to deal with software fears once again. And we could very much understand that maybe the small caps and maybe the other areas of the market rallies, like the semis, and maybe software lags. That could be a very, well, for someone like me who is very in software stocks, that would just be like, hey, some of my profile is doing good, some is really not, right? So yeah, I mean, overall, very explosive green day today. But as we move deeper into today right now, 17 minutes of this video, over 17 minutes, I should say, understand that we could just see a slow bleed for the rest of the day. And we really got to see what happens tomorrow. Tomorrow's data, economical data, is going to be huge because we're going to be seeing the impact, especially for inflation, GDP, among many other things. So stay tuned for that. If you do follow me, or want to smash a like if you enjoyed today's video, and also you want to come back tomorrow for another episode tomorrow. Like I said, we're getting data. It's going to be a lot of data to really digest, and it's going to show the extent of the damage here in the overall market, because the economical data is going to show the previous month primarily. We actually have, we have data tomorrow, and we also have data Friday. So definitely check back on this channel tomorrow because I'm going to be going over this data. This is actually very, very big, very big data for this week. PCE inflation report for the previous month. It's more than likely going to be hot. GDP is going to be very important, and this is going to, if GDP comes in negative, oh, it's gonna be interesting. Do I think it'll be negative? To be honest, I really don't. But who really knows? And then Friday is going to be CPI. This is really going to shake up the market a little bit too. So like I said, today is a green day for everyone out there that's been buying the dip for the last weeks, months. There's still a lot more fear to go, but we are getting just, what could be a start of a potential maybe bottom in a way. Let me know down below if you agree. If you don't, I will see you tomorrow for a brand new video. Later.